Hello everyone and welcome to a very special pre-budget show, that's the Budget Hotline. Over the next 2 weeks, we will be answering all of your personal finance, tax and real estate related questions live on air at 6:30 p.m. every day of the week. I'm Avanda Bash. Let me bring on board then our experts will be joining in. We have Dhirendra Kumar, CEO of Value Research today to help us out with all the queries, and also joining in just a bit is Vishal Kapoor, CEO IDFC Mutual Fund. Well, Dhirendra, let me start off with you. First up, the run up to the budget. So many expectations, so much speculation as to what exactly is going to be announced by the finance minister on D-Day. Possible income tax changes. We might even see some changes in the savings schemes, tweaking of some landscapes and tax treatment, etc. Take us through what exactly would be perhaps some money moves that you would advise investors in the run up to the budget.
One is that, whatever happens in the budget, I don't think an investor needs to fundamentally change gears or shift, or radically change his investment roadmap. Because despite, even if there is a radical change, the basic principles which an investor should follow does not get impacted, because an investor has to worry about, how he should be parking his short-term money, his medium-term money, his long-term money. Should he buy a home? And if you are a principled, or if you are a careful, diligent person who is thinking through his decisions, then nothing changes. Of course, there are. Let me just talk about, what has been widely speculated, that tax rates might come down. There might be some incentive for, additional incentive for buying a home and borrowing for that. But I don't think an investor should be really rethinking. Well, if you had no plans to buy a home, then I don't think this incentive is going to be a turning point in your decision making. Likewise, there was also a talk which has been, there was a speculation triggered by the Prime Minister's statement somewhere, which was denied by the Finance Minister, that capital gains tax on equity might be altered. And I don't know if it will be altered or not, but even if there is a small change in that, there is one thing which an investor can do. If you are sitting on your equity investment, sitting on a lot of long-term gains, which so far till this budget is tax-free, maybe roll it over, sell your investment, buy it again. It won't hurt you. Worst case scenario is that you might have to hold it for one more year, which you should be holding equity anyway if you are investing in equity for the long term. And otherwise too, long-term gains or no gains, I don't think the case for equity actually gets radically altered. So I would say look at, and this budget is going to be something from which one should have least of expectations on something, because the numbers won't be credible. A budget is a projection of, estimates of your likely income and expenses for the government. And when your income framework changes, because, GST can radically alter all that, they will have a tough time projecting the income and how impactful it is going to be, which looks imminent. So this budget is going to be, something we should look forward to it. It's a big event, a lot of announcement. I would say that, this is, one should only look at broad directions and pointers, nothing more than that.
A big event indeed. Vishal Kapoor also with us on the show. And Vishal, a lot of the politicians as well are describing it as a historic budget. But let's talk a little bit about what would really be the right path to take for personal finance investors. They've been advising to perhaps sticking to a long-term plan. What exactly would you advise?
I think I would second what Dhirendra just mentioned, which is that, end of the day, budget is an expense and income statement for the government. And of course, there are policy statement, direction, etc., that we all take from there. There are some, impact it may have on personal taxation, corporate taxation, earnings, etc. But, for a long-term investor, really the suggestion would be that, this is not the time to take any knee-jerk reactions or make some sort of spur-of-the-moment investments, really. If you haven't been doing something that you should have, it's unlikely that in a couple of days or a couple of hours you're going to change that significantly. Markets tend to be volatile, there's a lot of trading activity, etc. So the idea would be don't get swayed too much by that. Of course, follow it closely and see what is the impact for you as an individual, because there are some significant policy statements / direction that the budget event does seem to indicate. But for a long-term investor, really nothing that you should do in the near term or in the short term, just based on what was said on that day.
Okay, but let's help all of our viewers out. Our phone lines are abuzz. So let's connect with the first caller. Amit Tiwari is with us on the phone line from Mumbai. And Amit, welcome to the show. What's your question?
Hi, thanks. My query is primarily in relation to the telecom sector. Of late, we have seen that there has been a lot of action with a new entrant, Reliance Jio. And there is a thrust from Modi government on digital economy, and telecom is going to play a vital role. So what kind of expectation we can have from budget around telecom sector, because it's bleeding heavily. I know that some of the stocks like Reliance Communication, for that reason, the market cap is like 7,800 crores for a 100 million subscriber base. And for any investor like us, we would like to know that what kind of expectation we can have from budget on telecom sector.
Oh yeah, indeed. Rel Jio has come up and shaken everything. Let's talk a little bit, Dhirendra, about what would be the implications and expectations for the telecom space.
I really don't hold views on this, but I have some general knowledge on the activities which I see around me. Being an analyst, I look at the numbers. Things are very shaken right now, and there might be opportunities. Some people will, this is going to be a make and break for Reliance Industries, which has taken a big bet with Jio. And Reliance Communication, as you rightly said, that it's 100 million customers and 7,000-8,000 crore capitalization, and you can find there is no secret there. This company just doesn't make money, and it is heavily indebted, and its revenue per user is very low, and its indebtedness is driving it out of business. In terms of it has recently been able to, but not getting into specifics, because I am not an expert here at all. I would say that this will be an opportunity, and this will also be, all the thing that we see around us will present a lot of opportunity and a lot of risk as well. Take it in a measured way, and definitely don't base it based on trying to get an answer from a television show. Try and understand these businesses more carefully, and this amounts, to make something meaningful out of the big action. I think you need to delve deeper into it.
Let's have Vishal come in. And Vishal, if you studied the space in a little bit of detail, what exactly would you advise?
I think I would say that, similar to what Dhirendra was saying, there's a lot happening in the telecom sector, and clearly the move towards, post demonetization, the move towards digital economy, digital payments, etc., obviously has a lot of promise for many players in the sector. But at an individual stock level, really, I don't think that one can have a very generic view that we can share on air. Obviously, at a stock specific level, there's a whole host of factors, including leverage and profitability, customer base, etc., for many of these organizations. So in general, the positive rub off of a digital economy and what's happening in the social media, and this is nothing to do necessarily with the budget specifically. So that would be a macro sort of view. I may not be able to offer a very micro view on the specific stock on air.
Okay, fair enough. We've got more viewer queries coming in. Vikram Shah is connecting with us on the phone line from Mumbai. Hi there, Vikram. Can you hear me? What's your question?
Yeah. Hello, Dhirendra. How are you?
Hello.
Yeah.
Hello,
I am
Vikram.
a fan of yours.
Yes. Please go ahead with the question.
Actually, I learned all mutual fund investment from Mutual Fund Insight.
Good to know, Vikram. We appreciate all of the compliments.
I wish you very best.
Go ahead with your query.
Yeah, my query is very specific, relating to me only. recently, I have been investing in mutual fund for a long time. I am a long-term investor. Recently, I have inherited few large-cap blue-chip stock. So, what do you suggest? Should I hold it or should I convert it into mutual fund?
I think the best person to answer that right now,
I would say
Dhirendra.
that, if you can well articulate it that, it is a blue chip, it has existed for 10-15 years, and those companies are still relevant, I don't think there is a harm in holding it. One thing which, important, which one should be, aware of, that how significant it is in your overall net worth, and can you actually make a judgment about at least the existence and the longevity of these companies, or these companies being relevant for another decade or so? Then by all means hold it. If you are completely unaware of these companies, then consider entrusting this money to in one of your fund, which will take care of itself.
Okay, let's also get in a view then, Vishal, as to what you would advise him to do with this.
I would advise that move it to a fund, and the reason I would say that is because the concept and the definition of blue chips keeps changing. So unless you're someone who's going to monitor this very closely, let's remember that blue chips that were defined as blue chips 10 years back or 5 years back have continued to change. So this is a very rapidly evolving world. In which case you may be better off just, if blue chips is what you want to hold, then buy into a good fund which offers a portfolio like that, rather than having to monitor it and to keep track of it on your own, unless of course that's something you'd like to do on a at least a part-time, if not full-time basis.
Okay, that's the take coming in from Vishal, converted into a mutual fund. I believe we have another caller with us right now from New Delhi. A question coming in from Ramneek Dhaval. And Ramneek, are you on the line with us?
Yeah, ma'am, good evening. My query is specific to Mr. Dhirendra Kumar.
Okay.
I know he has been professing about the mutual funds only. Now, my query is, Mr. Dhirendra, knowingly well that now you have not been encouraging much about the real estate. So the question goes like this: after demonetization and government has reduced the home loans drastically, almost 100 basis points, with the horizon of 7 to 10 years, is it not wise to opt for a second house from investment point of view, and that too from a reputed builder with say on a prime location from investment point of view, and that too keeping the income tax rebates on the financial loans? Or secondly, the second alternative which you have been professing is negate totally the real estate option and continue with the mutual funds, because I already have investment in the mutual funds.
I think you've asked a question that I'm sure a lot of our viewers would want to know about. Real estate as a sector has been hit most adversely by the demonetization drive as well. In light of all of this, Dhirendra, which way should one go? What do you think he should do here?
No, I stick to my point, what I keep telling. By all means, I'm not in the business of promoting mutual fund or promoting real estate, but I think for most ordinary investors, financial investment is an easy way to invest. You can do it with small money. Making an investment in real estate of a ticket size of a scale which will also require maintenance, and look at what the rental yield or the appreciation potential of such real estate investment will be. I think given these variables, that look at the ticket size, the rental yield that you get in India, if it is very meaningful, by all means, but generally speaking in India, the rental yield on real estate is very low. Then comes the quality of house that you get and the timely delivery of that. What I know in NCR region and Delhi and around, that buying a house is inviting a problem. 90% of the houses which people have invested or bought, they haven't got possession. So it's a very complex thing, and you put and you make a big bet there. So these are the problems. And despite this, if you think that there's a special opportunity, a special situation, something is being sold on a desperate level, but I don't think 100 basis point, 1% lower return or a tax incentive should be the key, should help you. You should not be deciding an investment just because you are going to get a tax break. That's point number one. You should be buying it, you should be investing primarily for the reason of appreciation potential, and your ability to manage it and keeping it simple, and real estate is definitely not fitting in there. By all means, everybody should buy a home if you don't have a home, but there are 2-3 riders to this in my way of thinking. One is that you should be making some meaningful contribution by way of down payment, so that you are not leveraged substantially, over leveraged, which means that 20 to 25% of your own contribution. Then comes how much the EMI that you will pay. It should not generally exceed a third of your monthly income. So that's another principle which you should keep in mind. And third is that in a defined time frame, you should be able to move in that house and start living in, so that you start saving on rental outflow. If you are able to do these 3 things, by all means buy a house and wait to live in it.
Okay, Ramnik, I hope Dhirendra was able to answer your query. Let's connect with some of our other callers because our phone lines are ringing non-stop. Sai Kiran is joining in on the phone line from Odisha with a question. Hi there, Sai. Welcome to the show. Tell us what's your query.
Yeah, good evening. This is Sai Kiran.
Good evening.
Yeah, actually, I'm 23. Okay, and I want to invest in mutual fund. I'm already invested in Kotak Regular Select Focus Fund, which is a large cap fund. Now I want to go for a small cap or a mid cap or a multi cap. Which one will be better? And I have a long run. If possible, please suggest some funds.
Sure thing. So Vishal, let me take this over to you. Young investor starting early. He's taken the right steps. How would you guide him forward now?
I would firstly congratulate Ramnik. I think he's making a good choice. But again, I have a vested interest, so of course I will say that you should choose IDFC mutual funds, and therefore I will have to defer to my friend Dhirendra because he will hopefully offer a far more objective view. But do consider IDFC mutual funds, but I'm sure Dhirendra will be able to guide you on a full range as well.
So Dhirendra, what's the full range consist of?
No, I would say that, rather than getting onto a specific segment of the fund, whether it should be investing in a multi-cap fund or a small cap or a mid-cap, I would urge him that he should step back and consider that will he be paying taxes, then he should consider a tax-saving fund. One, he will be able to make the investment in equity at the same time. He will be able to save on taxes. If tax is not his frame, if he is not a taxpayer, and this is just his saving and he is below the threshold, then he should consider, normally first time investor, I want him to start with a balanced fund, because the market is a very difficult place for one to get reconciled with its ups, to reconcile with the ups and downs. So getting used to the market is very important. And as he has already started with a decent fund, I think he should focus not on any of these complex things that he is looking at. Of course, small cap funds will be more remunerative, more rewarding over a long period of time, but it may not be a great thing for a young person to get started, because the ups and downs of the small caps might scare him. Consider 1 or 2 more multi-cap fund. It will give you a diverse exposure of the market, and just be at it. Watch Investor Guide for a selection of our multi-cap funds.
Okay, so keep it simple. That's the advice really coming in when it comes to mutual funds. And of course, do tune in to Investor's Guide. Muhammad Ismail then is connecting with us from Chennai. Muhammad, hi there. Welcome to the show. What is your query on the Budget Hotline?
Hello.
Yes, Muhammad. Thanks for connecting with us. Tell us what your question is.
Yeah. Can I ask?
Yes, please. Go ahead. What's your query?
What is the target for Larsen Tobruk L&T?
Okay,
already the shares which I had
we are not really
sold. Yes, tell me, sir.
Yeah, this is a kind of question. This is not the appropriate show in which I definitely don't hold view on these specific companies and the price target in a defined time frame. So maybe you should be calling up in some other show of ET Now where stock specific questions are being answered.
And that is Buy Now, Sell Now every weekday at 11 a.m. But let's connect with our next viewer. Dilip from Bengaluru is with us. A question on personal finance, I hope. Dilip, what's your query?
Well, this is a question on a pre-budget expectation. I don't know whether it's the right forum.
Of course it is. Go ahead.
Are we expecting any simplification of exemption limits? We have a host of exemption limits which appear to be tailored towards government employees. Why not we get rid of all of them and enhance the exemption limit? Do you expect any action on these lines?
Enhancement in exemption limits. Vishal, to you first.
I think for Dilip, I think the market expectations definitely, I would say, and this is just echoing popular belief, is in that direction that, given the big demonetization move and the fact that, consumption in many ways may have been impacted for the last quarter or, maybe this coming quarter, you do want to see some move of transferring these monies back into the hands of consumers. And there are several ways to do that. Clearly, one could be, of course, looking at direct taxes and what you can do if possible, if there's room to reduce them. So that's one popular expectation that is getting built up, both for corporates as well as for individuals. The other one is around exemption limits, like you mentioned. Can we promote a bit more savings and directed investments by making it more attractive to participate in certain products or certain sectors through exemption limits? So that's clearly one of the areas being talked about. There are others as well, which is ways to see how you can get some part of the savings from demonetization back into the hands of the consumer, and hopefully get it back into the consumption pattern, which seems to have been impacted through this move.
Dhiren, would you concur with Vishal, and what is your call?
Yeah, I'm also expecting a clear reduction in the tax rates, and that is for a very specific reason. Finance Ministry in the earlier budget has clearly stated that our corporate tax rates will come down, and incomes are transferable and fungible. So if corporate tax rates are to come down, then the rate of taxes for individuals will also come down. Also, going by the state of inflation and entrusting more money, I'm not very hopeful that the tax slabs itself will be increased, because government will be focused on getting more people in the tax net, howsoever small that may be. But I feel that the highest tax bracket and the rate of taxation should definitely come down, even though the government has stated position is that it would like to have the tax net broadened.
Okay, that's the advice coming in. Let's also connect then with Om Prakash. He's joining in from Hyderabad on the show. Om Prakash, hi there. What's your query?
See, my query is that, recently Modi sir has announced that for senior citizens, some 7,50,000 can be deposited and there won't be any tax or something like that. Isn't it? I heard in the news.
That's right.
And secondly, suppose if you are if your salary or your pension is not more than 5 lakhs, you need not submit the income tax return. Something it was there in the paper earlier. I read in the papers also. And secondly, lastly, recently my physically challenged son, he expired on 15th of October. For 6 months, I think I do not know whether any claim can be made under the 80DD. 1 lakh I used to claim it,
Okay.
But my people from pension, they have deducted some tax and some amount I'll be getting, interest on FD also. So I was just wondering, do I have to pay something like that?
Some clarifications being sought.
Yes.
Dhiren, we're a little bit short on time. So quick response.
I'm not very clear about his third question, but the first two questions I will try and answer. Yes, the Prime Minister announced a 8% 10-year deposit for senior citizens. The maximum investment will be 7.5 lakh rupees. The details are still awaited by the bank for banks to roll out that scheme, and the income from that will not be tax-free. It will be taxable, but if assuming that you have some pension and all of it is below the threshold, if you are in a higher tax bracket, it may not be beneficial. The only advantage will be that 10-year term, 8% maximum investment of 7.5 lakh rupees. This is it will be yielding a higher yielding deposit for senior citizen as compared to others. It is definitely be beneficial for some people who don't pay, fall in the tax bracket. But for somebody like him, it may not be as useful. Of course, it will be yielding little higher. And the norms for senior citizens exempted from filing exempted from filing tax return is very clear and has been there on the statute book for a while. So you don't have to worry if you are below that threshold.
Okay, I hope Om Prakash we were able to help you out with that question. Our last caller, Ganesh from Mangalore, is with us. Ganesh, welcome to the Budget Hotline. Tell us your query.
Good evening to all of you. I have a piece of land on which I don't have any intention to construct a house. I already have a house. Would you advise me in the present scenario, present demonetization scenario, to sell this piece of land and invest in equity or in mutual funds? I have a time horizon of at least 10 years. I may be getting around 20-25 lakhs if I dispose of this land. Would you advise me to move away from real estate and invest in equities or in mutual funds?
Okay, Vishal, valid question there. What's your call?
I think in short, my advice would be yes, that does seem to make sense, although it has to be caveated with many ifs. Unfortunately, that's the nature of the market. Now, what you mentioned is that you don't really expect to do anything with a piece of land. So the expectation therefore should be that in 10 years' time, what will give you the maximum capital appreciation? Is it equity markets, either directly or through a mutual fund, or is it that piece of land? Now that is very specific to the piece of land and what's happening around it. Now I will not have enough information on that, but that could be a guiding factor for the consideration. So an expert looking at that could look at that piece of land and say, look, is it likely that it will appreciate faster than where you expect India earnings to grow? The rule of thumb I may use is that look at the equity markets. There are many positive factors that seem to have been built up, and therefore prognosis for equity does seem to be quite positive. Even if we look at earnings growth and just use that as a benchmark, and we say that somewhere in the early to mid double-digit returns is what you should expect on a CAGR basis over 10 years, then it's unlikely that a piece of land or real estate, at least historically that's not happened, that's the type of return that it's been able to get. So on that basis, like I said, the short answer would be yes, it does make sense to get into equity or mutual funds. Now between the two, if you're not directly into equity, if you don't have too much experience, then definitely go with mutual funds.
Dhiren, your call?
Yeah, I would agree with Vishal, but it is heavily dependent on the his understanding of the potential for the land. When it comes to land, all that matters is location, and the outlook can change dramatically, and real estate can prove to be very rewarding if it and that is a subjective call. That is an assessment which he has to do on his own. Another thing which comes to my mind is that will he be able to realize all the value of the land in a form which can be invested? Because there is a possibility that despite demonetization, it may still be hard to find buyers for real estate or land in all check transaction even today. So if he is able to derive most of the value in a form which can be invested in a legitimate way, then he should seriously consider it.
Thank you so much, Dhiren, for helping out with those viewer queries, and Vishal as well for joining in and giving us all of those personal finance tips and pearls of wisdom. I'm afraid we're completely out of time, so thanks so much for watching. Do keep the questions and queries coming in.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.